Good morning, everyone, and welcome to the European crossover webinar. And let's see. Okay, here we go. And we did go and see the euro firm up a little bit. We're looking for that target area, and we'll move this here. We talked about this on Face a couple of days ago. It's just logical that this is where we would want to go to. Here's that 1323 level. We're looking at the 2 hour 1323 level, confluence with 1322, the 38% of this entire range from 1176 all the way back up here to 1569. And then, of course, 1327 being the 61% of this area. That was actually our target area, the 1327. Now, let's go and take a look where we stand here. So what's going to happen now? Okay, well, I'm thinking that we're probably going to go and install. And if you take a look here on the Asian analysis that we did on the euro, says the euro has reached the target level of 1327, confluence with 1327. That's at the 2 hour level. Confluence with 1327, which is the 61% of 1176, 1420. We just covered that. And 1322, the 38% of 1176, 1569. Market enters a resistance zone, which is going to be 1340 on the daily close level to 1370. Would expect the market to push into the zone, but stall. So let's go into the daily, what we're looking at and what I'm referencing it. And here's those two as Blake likes to joke yesterday on Face about my pink lines. The pink lines, actually, I just use those for the key level for that day, okay? Because they stand out a little bit more. So when I'm jumping around back and forth, those come out a little bit clearer. So I'm looking on the daily level, and I did mention this yesterday in the chat room, is watch this 1340 level, because that's because maybe we'd have pushed this out and we would have gone a little bit further. But the key thing was, could it close above 1340? We can see it made a run up here, got up as high as what, 1339 or 1338, and then it pulled back. And we've done the same thing this morning. You can see here. So I think we can make a run into the zone, okay? But I expect the market to stall in here. And then unless something big happens and we move this way, probably stall, maybe be here for a couple of days and then just drip back. But into the zone is going to be just a kind of like I'm trying to think of the right word. I don't want to say Bermuda Triangle, but basically, I don't think the market's going to be able to do a whole lot. Once it gets into this 30 pip zone, we may be able to push some forays into this, but I don't expect a whole lot as we get above this here. I know that we're missing our exponential moving average. I don't know how that happened. Hang on. There we go. So you can see this is still in the sell mode. Let's see. And it remains in that sell mode. And I think that we're going to have a tough time. Like I said, if we try and push beyond here, that's key if we were to get above here on this close. And I think the next one, same thing about the close. So I would expect the market to get a little bit stuck in the mud here. We did go in and see the dollar CAD going to ease back. We even went to our area, the 33.50, and dipped even further. I was looking at 33.14. That did hold, but then as we pulled back later on the day, because of the strength that we saw here in crude oil, that took a dip. And let's move this out of the way. And actually, I got very, very lucky, very fortunate. Some of us were looking for bids just underneath 33, and I got filled on mine, but I'm actually already out. I kind of thought that we just would rally up just a little bit, and we come back in and test the 32. But I tell you what, Rick was asking me, well, what did you already jump out for? And the thought is because of crude and the strength in crude and the momentum here. But that being said, even yesterday when we had a chance to break past the 33.14 and hit some dips below, we really didn't. It wasn't until late in the day, and now we've kind of bounced back. Even with the strength of crude, the dollar CAD is still holding above here. So, but I thought, well, we might make one more dip and not buy the second dip and then see what happens. But we did pop back up to this 33.14, although we've kind of eased back just a bit. We'll see what happens, but the strength in crude still remains. So we were looking, remember I was looking for 57.98 actually for the last couple of days, and we got it. There it is, 57.98. Well, we went above that. Look, we even got above that and then continued to eventually push. At 57.98, I think it held it to the tick. And then we eased back and then we reasserted ourselves at the time. Yeah, here it is. Look at there. You see right here? The high was 57.98. And that's what we're looking for. And then we dipped back to 57.59. So we came off 40 ticks and then we reasserted ourselves and we've been pushing up. And that's why I thought maybe we did. I thought we might just pop up to about maybe 33-ish, 05, 7, and then dip back. And then I thought that'd be a pretty good little pickup. But you can see, even though the crudes continue to make a high, the dollar CAD hasn't made a new low. So even though we've fallen off quite a bit, positively diverging. And also, boy, look at the cable. I didn't even see this until the move was already well under the way. I forgot who mentioned it. I'm like, holy smokes. But if you look on the cable here, it didn't get past this close. I was able to post that, but I thought about taking a shot at it. But the time I looked at it, it was already, I think it was about 25 pips already below that. I'm like, well, forget it then. But you can see here on the daily close here, you see right there? Right there. And I think I made it right there too. Look, 33.74, you see? And then now we dipped quite a bit off of that after hitting that level. Let's come in here. See how we came up here to this 33.74, and then we dipped off quite a bit. Look at that. And now we've since kind of tried to recover. This is just a wild one. I wouldn't have mind, but I missed it. I didn't even see it until the guy was mentioning in the chat room, even though I was there. And I saw that and I said, wait a minute. And I looked on here and there's that key daily level right there, 74. And then, but by that time it already was off, I think about 25 pips or something like, well, forget it then. And we kind of hung around, but eventually we slid back and then obviously we pulled back a little bit further. That's just very wild market. You got to go and be very careful. Well, look here, looky here. Oh, wow, look, we finally got the dollar yen up here. There's this area I'm talking about, remember? This was looking for 169, 1169. Well, where the heck are we? 1160, looks like we made it up to 1170. Let's see where the S&Ps are. Well, we're still hanging around here. Let's see where the Aussie yen is. I was looking for, remember, 79.10. There you go, 79.10. And let's take a look for that. I really want this to push up in here to get just above the 61%. Boy, these S&Ps are hanging on like a rock. Well, that being said, let's go and move on to the news. Yet another humiliation last night for Theresa May's government. Look, the old bag needs to leave. I mean, this is getting pretty ridiculous. I mean, it's really pathetic at this point. Even Blake, I heard Blake making a point. What do you keep bringing up these votes for if you're just going to keep losing and looking like an idiot? I mean, I don't want to inject politics, but this is just silly now. I mean, just one humiliated vote after another. But astoundingly, it looks as if a Brexit deal will live to see another day with the MV3. I don't even understand any of these Brexit headlines. I really don't. I'm just kind of trading off the technicals on some scalps. A third so-called meaningful vote. Yeah, exactly. Meaningful vote. Now expected to take place same time before next week's EU summit. You know, I think we're going to be into the fall and we're still going to be taking these meaningful votes. What happened last night was a total collapse of a cabinet discipline as top ministers refused to support May's demand that no deal remain on the table. While not legally binding, then if they're not legally binding, well, what's the point of the votes? I mean, like I said, this thing is just getting really old in the tooth, to be quite honest with you. The ensuing vote made it clear that a solid majority of Parliament wants to rule out a no-deal Brexit under any circumstances. May is now forced to change tack, whereas once she threatened with my deal or no deal, she will now tell hard Brexiters that her deal is the only way to avoid a very long delay to Brexit decree, no Brexit at all. Such an approach will infuriate them. One of them already described it as a scorched earth policy, but it could work. Much now depends on whether lawmakers can, in coming days, mount a cross-party effort to secure a softer Brexit, even something which keeps Britain in the EU single market. For now, it looks as though Parliament will later today vote to ask the EU for a short delay to Brexit. Votes on other options can also be scheduled. Personally, I don't know why this thing is continuing to drag on. And to me, I'm even surprised that the cable is even up at these upper levels, because some things don't even make any sense. With all this chaos here, I would think, I mean, I wouldn't bet in that way, but I would think that this would probably send the cable screaming lower because of all the chaos in here. But anyway, it says one thing to watch out in the European politics today. NATO releases its annual report in the midst of persistent tensions between Donald Trump and European allies over defense spending. The European Parliament, meanwhile, will vote on whether the European Union should start trade talks with Washington, and the Bank of France is expected to issue a small downgrade to the country's economic growth prospects. After a night of drama in Westminster, Sterling is given back as on Wednesday surge as traders eye the next series of UK parliamentary hurdles in the tortuous Brexit process, even after a win for lawmakers seeking to prevent a crash out of the European Union without a deal. Amidst confusion over amendments to the government's vote last night, Parliament eventually voted narrowly against a no-deal Brexit stage at any stage, not just March 29 as the original motion suggested. The pound surged to a 9-month high of 33.83 and a near 2-year high against the euro as investors' worst-case scenario appeared even less likely, if not completely off the table in the event the EU does not agree to a probable request to delay Brexit. Goldman Sachs said the latest developments mean their assigned probability of a no-deal exit had fallen to 5% from 10% previously, but the pound slipped back below the 133. First thing, Thursday, ahead of another parliamentary vote on a time-limited extension of the Brexit process, and as UK Prime Minister Theresa May indicated she would put her existing agreement to a third meaningful vote next week before a formal request at the next Thursday's EU summit. The threat of a lengthy extension is seen by many analysts as a way to bring dissented members of May's own ruling Conservative Party back into the line of favor of the deal, but a defeat today for the vote on an extension request would add further confusion to the process. And this is what I don't understand, to be quite honest with you, is that I would think that this would just go on and push this lower. I don't know. I mean, I guess because it avoided the crashing out, but to me it's just more chaos. I guess then that's why the cable ended up slipping back. But to me, it just seems like you'd end up going lower. To me, I mean, if it's just one meaningful vote after another meaningful vote, I mean, that's just my take. I haven't. I wouldn't mind shorting it up in here in that 33.74. By the time I saw it, it was already, I think, 25 pips lower. And I said, well, then that's not worth the risk then, because I'm already going to be down 25 pips from where I would have shorted it, and then I got to give it some room. But anyway, getting back here to the news. While Brexit optimism buoyed all world markets on Wednesday, a mixed set of Chinese economic numbers, the first thing today, and indications from President Trump overnight that he's in no rush to seal a trade deal with Beijing, dampened sentiment on Thursday. Shanghai stocks fell more than 1%, with Asia's other major bourses little change. U.S. and European stock futures were flat. Also, China's offshore yuan rate weakened slightly after the news. Well, then, and here I am jumping all over the place, but to me, then that limits the upside here. He's in no rush to agree to a deal. Then that should, probably a little bit of him talking, but to me, then that would limit the upside and open the downside for a little bit further pullback, and then really would, open the door for the yen to pull back probably some, as well as the Aussie yen. Once again, I think that any moves up here in the Aussie yen up to 79.10 would look very nice here, just above the 61%. This market is still holding up very well. Canadian dollar notches a 9-day high as global investors grow optimistic. The Canadian dollar strengthened to a 9-day high against its U.S. counterpart on Wednesday as rising stocks and oil prices offset domestic data showing the 5th consecutive monthly decline. U.S. stocks rose broadly after the U.S. producer price data backed the Federal Reserve's patient stance. Gains for the loonie came after U.S. Trade Representative Robert Litzinger said on Tuesday that the United States is working on a plan to lift tariffs from Mexican and Canadian steel and aluminum. Canada's once hot housing market has softened since the start of the year, weighed by tighter mortgage rules and 5 interest rates from the Bank of Canada since July of 2017. Bank of Canada Senior Deputy Governor Carolyn Wilkins is due to speak on Thursday. Last week, the central bank said it expects the Canadian economy will be weaker in the first half of 2019 than it projected in January. And it was watching developments in housing, spending, oil markets, and global trade. Well, I think she would take a cautionary stance. So that would probably allow for the dollar CAD to strengthen. So really any dips down here should be well supported, although even though oil is way up in here. Moving on, Australian New Zealand dollars are pressured as bond yields keep falling. The Australian New Zealand dollars were on the defensive on Thursday as domestic bond yields extended a recent steep decline to multi-year lows, leaving them a long way under the comparable yields in the United States. Chinese economic data offered some support areas they were not as weak as bears have been counting on, while industrial output missed forecasts. Retail sales and other urban investments both beat expectations after a run of disappointing news. They left the Aussie at 70.74, but up from Wednesday's low of 70.49. Bonds on both countries continue to be rally as investors narrowed the odds of a cut in official interest rates this year. And as a result, the 3-year bonds, the most liquid paper at the short end, had dropped as far as 1.513. Much of the Forex action was again in sterling, which stretched as high as 88.51. Sterling odd at one point, territory not visited since British first voted to leave the EU back in 2016. The jump came after Parliament rejected leaving the European Union without a deal after further weakening Prime Minister Theresa May and paving the way for a vote that could delay Brexit until at least the end of June. Oh my God. Dollar pulls up from a 9-day low as sterling recoils after big rally. The dollar pushed ahead from a 9-day low on Thursday, largely helped by the pound snapping back after a sharp rally on the Brexit relief. The pound is experiencing a bit of recoil after rising so steeply in the previous session, said Shin Kadota. The market seems to take a look at how the vote on delaying the Brexit departure plans out and get an idea on how long the postponement would be, and sellers have emerged amid this pause. The pound has already made a lot of ground since its gains are mostly generated by expectations rather than fundamentals. Its current rally looks to have run its course, said Junichi Ishikawa. The euro was a shade lower at 13.20, the Australian down at 70.68. Indications on Thursday showed China's January-February industrial output growth slipped to their slowest pace in 17 years. So this is a key right here. I mean, the news keeps coming bad. And remember, China, we were about, a month ago, 5 weeks ago, it seemed like every day there was a new stimulus coming out of China. But to me, I would think that this is starting to wear old. And Trump's already said he's in a rush to make a deal. To me, I don't know. It's levitating this thing here at this point now. Boy, they're stretching this thing for all it's worth. Let's take a look here. Boy, we're just about the 78% too. There's 28.51. Nearly right here, 28.24. There you go. So 28.25, this is pretty good solid resistance on a daily close. Maybe they can push this a little bit higher. Maybe that takes the Aussie yen to the 79.10. You see it on here. And maybe pushes this dollar yen just a little bit higher. We've hit our area though. We're looking for 11.69. Maybe we can push a little bit higher. But this S&P being up here in light of everything doesn't make a whole heck of a lot of sense here. So keep that in mind. If we see a pullback, then we'll probably see the crude oil ease back too. Gold fell on Thursday as the dollar gained some ground amid uncertainty over the Brexit erased, but the metal held close to two-week highs, hit high in the previous session as tepid U.S. inflation data. Markets are now assessing the landscape in Europe and UK after the vote. If we do see the deadline pushed out, there wouldn't be a huge impact on gold prices, but the reaction will be great if we see some sort of deal agreed in the UK Parliament, said Daniel Hines. So with that, let's go on and move into analysis, and let's take a look at what's on the calendar for today. Building permits. No, we know we do have non-farm payroll, weekly non-farm payroll, jobless claims. Here's jobless claims. Canadian Housing Price Index. That's about it. Jobless claims, Canadian Housing Price Index, and building permits. Let's go move into the analysis. Well, as mentioned here with the euro dollar, the euro has reached its target level of 13.27, confluence with 13.27 to 61% of this 11.76 to 14.20, as well as 13.22 to 38% of 11.76 to 15.69. Market now enters a resistance zone of 13.40, a daily close level, to 13.70. Would expect the market to push into the zone, but stall. So here we are on the daily. There we are. So we did reach that 13.27 that we're looking for. Oh, here we go. What the heck was I doing? There we go. The 13.20, there's 13.23, the level 13.22, 38%, 13.27, 61%. We're looking for 13.27. We got it. I think we can push a little bit higher. Here's 13.60. That's been a key level, but what we're looking for on the daily, which is what's going to move this market, right in here, the 13.40. 13.70. We'll split the difference here. We talked about that. We'll call it 13.60 for the intraday resistance. There's that 13.40 we were talking about, remember, yesterday? There we go. And where's support? We know the importance of 1291. support's going to be right there, 1282, 1282. If we were to see this market rotate back, there's even some more right there at 1293, but we'll give it the little, they want to push a little bit higher, bit lower, 1282 for good support. We don't want it to be too close. Let's move into cable. There's that level right here. That's important there. And it was important yesterday, 33.74. So we're going to keep that, use that as our, see right there? And I didn't even see it until it was already back. And I think it was down 25 pips from that area when I saw it, when somebody in the room said cable, wow. And I didn't even see this thing sneak up. I mean, we didn't even see this thing at all. And it made that run up there. But well, anyway, it's going to be 33.74. This thing has been vicious. $32.21. And we'll go with that. Just a pip lower, we'll call it 32.20 for support. And we've already picked out the resistance on here, and it's a daily close resistance. This thing is all over the place. And you really have to pick and choose your spots or you get chewed up. Well, here on the Aussie, we had left our resistance here at 70.91. And you see we got up here. I think yesterday we were off by 1 pip. Yeah, look, we made it to 70.91. 791 point, look, 792. So we're up by 1 pip. And we've pushed even higher now to 70.98 and then dip back again. And that's what I was saying. I was going to keep that 70.91, and I didn't think we'd come down to where my support was, which is 70.25. It wasn't even that much of a big spacing, but it's still going to remain the same. So nothing's changed here with the Aussie. We're going to move into the Swissy. We talked about the resilience of the Swissy overall. We had 0103 and par 48. Well, we did dip as low as par 42, it appears. Let's move into the 2 hour. Oh, actually even lower than that. It's not a pair I keep too much of an eye on, and we've been holding really well, very well. We did make this move down here. For now, because it's just a level in here, we're gonna go with this par 28. I know that Amir likes to trade this, but it's not a pair I follow too much at all. It used to be a good harbinger of where the dollar was going overall, and then it, as I used to say, it took the dollar out of the woods from back in last March, and then after that, once we hit into the summer, it just started diverging and just doing its own thing. But we since kind of pulled back, so we'll go with this par 28. And obviously, we're going to have to adjust this resistance coming up. And resistance would come in right there, par 70. Par 70 here with the Swissy. And let's go move into the dollar peso. This continues to hang around this 1930-ish area here that we consider a nice value area here. And after that fall, I thought we would have to do some work. You know, I mean, it wouldn't just be immediately bounce up. But we're still hanging. I mean, we're not getting much of a push on the upside. Now, I thought we probably would have pushed a little bit more and then, but continue to vacillate in this area. But we had a nice hammer here, and we ran out of gas. We did back. Now, I would have thought we probably would try to push higher, but this market acts like it kind of wants to go lower. But obviously, the strength in oil certainly has its own bearing on this. I guess in light of that and the dollar weakness, it has held up relatively well then, I guess. It certainly looks like on a short-term basis, they'd want to test 2650. That's some good resistance right there, 2650. I think some demand will come in there. It'll be 265. This is a little bit tricky right now. Well, that's what we had before, and that's at 266. We had 265, and if you round it up, it's 266. And resistance is going to come in right there if we were to push up higher. 19379. With that, let's move into West Texas Intermediate. Well, this has been my target 3 days ago, which was 57.98 when I was on face with Dale. And we actually made this to the tick. And then we fell off 40 pips. And then we've reasserted ourselves. Someone in the room had 59. I don't remember who it was, but someone had 59. There's that 57.98 I was talking about. And I actually think when you looked at it on the line here, it came out to like 58.16 or 58.18, something like that. Yeah, right there. 58.16, but I had 57.98, and that did stop the market, and then we fell back 40 ticks, and then we reassert ourselves. I don't get this. I really don't. That's 58.76, and could push as high as 59 even. Well, we'll go 58.76 for today. I would think we'd have to come back in here, but it'll be 58.76. We have 56.48 for support. Obviously, going to wind that up a bit. Support is going to come in right there at 57.60. And that's going to coincide right there. 57.60. And let's go move into the dollar yen. And just give me just a quick moment. Okay, thank you very much for that. I actually had to let the dog in. It's making some noise outside. It's late in the evening. So let's go on and move into the dollar yen. Well, here we are. We're making this run up in here, and we were looking for a good resistance level 1169. We're there. Look at that. But look at the S&Ps. They're pushing up higher here. And we got a good strong level here, 28.25. Very, very good strong level on a daily close. And the news out of the U.S.-China talks, hey, Trump saying he doesn't have to wait, go for a deal or push for a deal right now. We're probably still very, very close. That being said, the China data came in the worst in a very long time. So it's really putting the pressure on here. I don't see how we're holding up here. Then these Brexit votes are all up and down. So maybe we can push a little bit hard and still then rotate lower. So on the dollar yen, what we're going to be looking at, and it's this key daily level here. See if we can't squeeze it a little bit higher, which is going to be 1187. And that'll be it right there for today. I like this area 69, but the S&Ps are on the highs right now. We are a bit long in the tooth in this move, though. On the downside, see, there was our pink line here. And then I have those on there, as I mentioned earlier, because those are kind of like our key area that, you know, I want it to stand out. I usually just go with the blue, and if it's thicker, it's more meaningful. But if it's a key area for that day, then I want to go and put that so it'll stand out a bit more. But I'm going to move it in, like I said, to 1187. And as far as intraday support, it's going to be right there, 1129. But I'm not expecting this to pull back. I just expect it just to keep edging up a little bit. And then we'll see when this S&Ps get a little bit tired, and maybe we'll be able to catch this. Let's move into the Aussie yen. Well, 79.02 is a level here. You see that? And also confluencing with 61% of this move, okay? But I think we can make a move up in here around the 79.10-ish area. Maybe even push it a little bit higher, which come up as high as, oh, if you see that here, let's actually move this here. Call it 79.15. There we go. There. And this is 79.15. 79.15. Let's see if we can squeeze this a little bit higher up in here. And support is going to come in right there at 78.60. So I like this to push a little bit higher. It's actually taking its time. Let's do a 161% on this. See if we can see a stretch in here. If we have 127% confluence with that 78.15. That would take us here to 79.27 of this range right in here. And got a little bit of resistance coming in right there too. At 79.29. There's 79.29 right there, and that's 161% B. 79.27. There we go. I like that area in here, and that confluence with 79.27, which is 161% of this move. So if we were able maybe to shoot up in here, then maybe run out of gas, depending on what happens with the spooge today. Let's move into the cash dollar index. We'll go with this right there, 96.46 for support. Took out, went beyond that 73 and pushed it for all it was worth. Resistance, well, you can see this is it, but we'll put it just a little bit above that. 96, we'll split the difference in here. 96.85, 96.85 here in the cash dollar index. And I think we're just kind of bebopping around here for right now. We're seeing the euro pull back a little bit here. So we just weren't able to take out yesterday's key daily close high here. It's 40. I think we got up to 39 and pared back a bit. I thought we might be able to push up a little bit higher the euro. Nothing standing out that I would say here on the cash dollar index, so that's why we're not spending a whole lot of time in here. Moving on to the bunds. Well, we had 66.51, and we're going to stay with that. Actually dipped just a hair lower. We'll call it 66.45. Just got past that 51 just a little bit. But resistance will come in. We'll just stay with this main key level, 66.78. And finally with the DAX. Still pushing higher here. We may be able to skunk past this area here with these S&Ps still wanting to push higher. And I think they may just be able to go on and trigger some stops. Let's look on here on the daily. Right there. 11,735 if these S&Ps get pushing higher. Let's give it that upside option, 11,735. Be watching that very closely. Support right there, 11,586, right there. Euro pairing back just a bit here. Same here with the cable here. Dollar just a little bit on the bid. Well, we're going to get our bias chart posted in the room, and we'll see you a little bit later on and there. And thanks for joining us here on the European Crossover webinar.